Let's cut to the chase. Finding investors is tough. I'll show you 9 practical ways to get their attention and start the conversation. Hi friends, I'm Cody Koch. If you are new here, I'm a 25-year veteran investor, trader, and business owner. On my channel, I like to talk about investing, trading, and business concepts. On multiple occasions, I have successfully raised capital from investors for projects that I've done, as well as I've helped a few others raise money from investors for projects they were doing. What I'm going to show you today in this video works for all types of investors for all types of projects. For example, this works on angel investors who invest in startup businesses, real estate investors who focus on investing in real estate deals, oil and gas investors who like to invest in oil and gas projects, business acquisition investors who are looking to invest in a business acquisition type scenario, as well as private equity and so forth. Before I get into the 9 ways to find investors, I would like to say that investors will only invest with people they know, like, and trust. Now, with that as our guide, I've broken down this list to go from those who know you the least down to those who know, like, and trust you the most. So let's get to it. Number 1 on this list is databases. Now, a database is essentially a large amount of information gathered from various sources that will give you names, phone numbers, emails, possibly addresses of people that for whatever reason have been identified as potential investors. Typically, these databases, you have to go out and purchase them. They are generally not cheap. Here are a few examples. You can go to investorhunt.co, familyoffices.com, pionline.com, and fintrex.com. But these 4 websites are pretty good and they'll get you started and you'll be able to understand what's possible out there. Number 2 on the list is LinkedIn search. Now, if you go to LinkedIn and you simply type in investor, you will bring up approximately 1 million possible connections on there. You can often refine your search by typing in things such as real estate investor, angel investor, private equity investor, and so forth. Refine it down to a much more specific group of people you may be looking for. From there, you can try various techniques to reach out to them. Now, I want to say databases and LinkedIn search, although you're able to get a very wide variety of investors from this, typically the conversion rate on these investors is going to be 1% or less. In other words, you have to reach out to a very large number of these people in various ways to get some investors to actually invest in your project. Number 3 on the list is events and conferences. Now, there's all kinds of events and conferences in various industries, and there's various kinds. Some are specifically geared towards investing and looking for potential investment opportunities in industries. Others are more events that are showcasing the latest ideas or the latest innovations. In either case, you can often bump into potential investors at these kind of events and conferences. Another side tactic I've actually seen work in which you create your own seminars or events that will bring potential investors to you. For example, I'm familiar with a gentleman who has successfully raised many millions of dollars buying established real estate properties. He preferred multifamily real estate investing syndications, and so one of his favorite strategies is he would travel the country giving free seminars on how to do single family home real estate investing. And while he would often get a good number of people to join his seminar, and he would talk to them, typically at anywhere from 30 to 50 people in the seminar, while he was there teaching them about single family home real estate investing, he would discuss his multifamily syndication on the side. He said typically if there were 50 people in a class, at least 2 of them would approach him at the end of the class interested in investing in his multifamily projects. This is one major way he was able to grow his investor base over time. Number 4 is investor groups, and that includes either online investor groups or offline in-person investor groups. Now, typically offline in-person groups, you're going to have a much better hit rate for potential investors. Online is a little bit more scattered, and it's difficult to know if anybody on these online forums are actually legitimate investors. Most major cities will have some sort of local investor group. Now, that could be a real estate investor group focusing on investing in real estate in the city, or angel groups that are focused on investing in startup businesses from the city, and so forth. Generally speaking, you want to get a part of these groups. You want to get yourself into them as best as you can and try to see if there's ways for you to work with them. Number 5 is advertisements. So thanks to laws and regulation changes in 2012, it's actually now possible to openly advertise for investors in various forms of media, whether it be newspapers, television ads, and these days it's mostly social media ads. It's because it's much easier to target your advertisements specifically to a group. Generally, I've seen advertisements work really well in the real estate syndication space, oil and gas well drilling, and a few others. Generally, you go out and you find a good deal, or you come up with a really good idea, and you can advertise this and the potential returns that investors can make on platforms such as Facebook, LinkedIn, and so forth. And generally speaking, these work pretty well. On average, statistics in the industry shows around 2% lead rate. So out of every 100 times people click on your advertisements, 2 of these people will reach out to you and want to get more information. There have been many millions of dollars raised using this method. 6th on the list is social media followers. Now, this one's a bit unique. It comes from the world of magnetic capital. The idea is you create a podcast, you create a YouTube channel, you build a Twitter or X account and a big following on there, as well as other social media websites you can build a following on. And typically what you're trying to do is you're trying to educate the public on whatever you are looking to invest. For example, if you're into real estate, your channel or your podcast may discuss a lot of real estate deals. It'll discuss details related to real estate, the numbers, the statistics, and so forth, and you're kind of educating your viewership. Over time, you become a bit of an authority, you can develop a following, and from this following, when eventually you come across a deal, you can reach out to your followers and ask them to invest. This is very common in any kind of form of syndication, whether it's oil and gas syndication, business acquisition syndication, real estate syndication. This is a very common strategy you will see utilized all over the place. I don't really know the conversion rates of this particular strategy, but I do know it is better than cold emailing. Generally speaking, they know you and they at least like you thanks to the content you've put out to the world. Number 7 on our list is referrals and introductions. So this is coming from people who already know, like, and trust you. They're going to refer you and introduce you to people who may be potentially interested in investing in your project. Now, the introduction portion of this is very, very important, as I'll discuss a little bit later in this video. Referrals and introductions are a very, very powerful way to raise capital. Many people who've successfully raised capital over the years, they'll often get anywhere from 20 to 50% of their money raised will come from referrals and introductions. This is why it's very important every person you talk to about potentially investing, you approach it from the point of view of going, hey, here's what I've got going on. Do you happen to know anybody who might be interested in investing in this deal? Oftentimes this works as kind of a soft sell. The person you're talking to may turn to you and go, well, I'm interested. Or if they're not really interested, or for some reason they can't or don't have the money or they don't want to, you're not really putting them on the spot. You're just simply saying, hey, do you happen to know anybody who might be interested in investing in this? And it's a sort of a soft sell that kind of gets them off the hook. They're interested personally, they'll go ahead and engage and say, yeah, I'm interested. Or they may think through it and go, I don't really know anybody that would be interested. Or they may say, yeah, I know my Uncle Bob. He might be interested in something like this. I'll help you get a hold of him. That kind of referral and introduction system is a great way to raise a lot of money. Number 8 on our list is your professional network. Now, this is not necessarily friends, but these are people that maybe you've worked in the past, maybe they're clients that you've had over the years. In some capacity, you've worked with these people, they're familiar with you, they know you. Oftentimes they trust you. They may or may not like you yet, depending on how much of experience you've had with them, but they're definitely open to listening to you and communicating with you. A lot of the times you can get great referrals and introductions from this particular group. Lastly, number 9 is family and friends. Now this one, bear with me for just a second, because I know everybody in the world recommends family and friends as the first source you go to. But it's actually a very powerful group of people for multiple reasons. For starters, they're the only group of people that you probably have that know, like, and trust you. So they're already ready to go. If they have capital at all, they're ready to invest. Now you may say, none of my friends and family have money. That's actually really normal. Most people's friends and family do not have any money. But the reason this group is so powerful is because of number 7 on this list, referrals and introductions. Approach your family and friends and just simply say, here's what I've got going on. Do you happen to know anybody who might be interested in investing in this? There's a fairly good chance you're going to start to build a pool of contacts, referrals and introductions that can very likely grow into a significant investor base for you. So family and friends, although they may have money and be interested in investing themselves, in many cases, they are fantastic referrals to other potential investors that may be exactly what you are needing. Okay, so those are the 9 ways you can find investors. But just as important is how you contact them. And we're going to talk about that now. This information is based on survey data of investors from Heini Zachariasen, who's the founder of Vivino. He had raised over $50 million in his startup successfully from investors, just like we're talking about. And in his survey among these large group of investors, he was able to find a pattern in what methods of communication they prefer for the initial contact from an entrepreneur who may ask for money from them. Now, this survey is based on a rating system from 1 to 5, 5 being the best and most preferred method to be contacted. So we're going to start at the bottom of this list and move our way up. Number 7 on this list is Facebook Message. Its rating overall was 1.5. 80% rated it A1. It was one of their least preferred methods of being contacted, so I really do not recommend you reach out with a Facebook message. It's considered too personal. Generally these days, Facebook messages for family or friends to kind of communicate. Do not do it when you are initially reaching out to an investor for the first time. Next is a text message rated a 1.5. In this case, approximately 80% of surveyed investors rated this as a 1 for the same reason as the Facebook message, in which it was considered too personal and a little bit of invasive in the private life of the investor. Number 5 on the list was phone call. Now, what's interesting about this, it rated a 1.9. A handful of years ago, maybe 10, 20 years ago, this was actually more of a preferred method to reach out to people to potentially invest in deals. These days, though, phone calls are generally screened. A lot of people do not answer their phones anymore. It's considered very personal and private, pretty much just like the previous two, where it's something that's only used among friends and family. Number 4 is LinkedIn Message with a rating of 2.3. Not particularly great. A lot of investors do not necessarily like this method, but it is usable enough that if you're in a pinch, you have no other way to reach out to a potential investor you would like to be a part of your deal, then this one is somewhat barely okay. The big issue with LinkedIn Message is, generally speaking, it's going to get lost among a lot of other people reaching out to these potential investors asking for money from them. You can easily test this if you simply change your headline on your LinkedIn profile and just say investor, and start to see how many random messages you begin to get from people wanting to invest in their various projects. For that reason, LinkedIn messages have a very bad tendency to kind of get lost in this enormous sea of messages that are being thrown all over the place. On a little bit more of a positive note, it is at least an okay last resort. It's not considered necessarily too personal. It's still in the realm of professional, so LinkedIn messages can be used in a pinch. Number 3 is email, rated at 2.9 on average. Now, most investors who were surveyed were actually okay with this method, but about 20% rated it A1, and it seems the primary reason for that is that their email inbox gets full of stuff, and so it's very easy for emails to get lost among the shuffles. So email is far from perfect, but it generally is an okay message system in order to reach out to potential investors. They're comfortable with this, they're used to this, it's still considered professional, but be aware some angel investors receive 20 or more messages a day from people asking for their investment. Number 2 on this list is you bump into them. So it rated a 3.4. Only about 10% of the investors surveyed did not like this method. Typically bumping into them at things like conferences, events, seminars, like I talked about earlier, parties, get-togethers, workplaces, and so forth. You can bump into them, kind of have a conversation. This is why some say it's very important to tell everyone if you're going to try to find investors, because by doing so, you're going to eventually bump into somebody who would be interested in what you're doing. I've personally seen the bump into method work pretty well. In fact, the most amount of money I ever saw raised was from this very method. First and most important is introductions. This rated a 4.6. 70% of the people surveyed rated this a 5 out of 5 and was their preferred method. Now, this is basically where you are introduced to a potential investor by somebody else. Could be another investor, could be a business partner, who knows, but this is why referrals and introductions were one of the most important ways to find investors I mentioned previously in the video. This is one reason why family and friends and professional network are so important, because they can very much help you with introductions. They're not always easy to get, so you often have to work towards them, but do not be afraid of them. Use them as much as possible, because the conversion rate, the hit rate on introductions is very, very high. All right, so real quick, out of these 7 different methods of communication, I would warn you against using the lower rated methods. And the reason you want to be careful with that is because if you use too much of these lower rated methods, you will kind of damage your own personal brand, okay, unfortunately. Over time, if you are using this too much, people will begin to avoid you, they may talk ill of you, so I would avoid those other methods. As much as possible, try for introductions, bumping into them, or emails, and really you don't want to drop a whole lot more below that level. I also recommend not using more than 2 of these communication methods on an investor at the same time. It just gets a little bit overwhelming for them. Also, I do not recommend sending more than 2 messages to the same investor if you haven't heard from them. Typically, if you have not heard from them after the second message, there's probably a very good reason. So what should you put in your first message to potential investors? Let's say it's an email. Well, you want to be short, be precise, and be relevant. Keep it short, no longer than a few lines, and also be relevant. If you can particularly find things that investor likes to invest in, or target information that investor very much would want or need to know to make a quick decision on the opportunity that you're presenting him or her. I would also say it helps to find investors in your geographical area or in your industry. There'll be a little bit more of a sense of connection there. So in this video, I've discussed how you can find investors and communicate with them for the first time to fund your project. In a previous video, I discussed one of the most important things you can learn in business, and that is business is a game of margins, not a game of volume. You can actually watch that video here. If you enjoyed this video, please hit that like button and subscribe to see more content in the future, and I will see you in the next video.